Good morning, everyone. This is Financial Literacy 101. And today we'll be talking about Dingdong. I just kind of use that as a segue that people were telling us and showing us those video clips about Bing Bong because that's the way subway doors close. Whether you live in New York, DC, Jersey, people who have subways. I know there's some other states out there that have the subways. But anyway, this stock is about Dingdong. This is a Chinese e-commerce stock that does groceries. And we're going to do a deep analysis on this. And as you can tell, my stock indicator light is white, meaning I don't know if you should buy or sell or do anything with this stock. I mean, I do see a lot of profit. The market is kind of balanced with this particular stock. More is leaning to people to invest. Even the company's executives are buying more into the stock with about $30 million. They want to do repurchasing programs and buy more of their stock back, meaning they're going to decrease the volume of the stock, which may make the stock a little more profitable than what it is. They have to make that public, but this is a trick. Sometimes this is just how business works in order to attain power and position. But nonetheless, we're going to get into it. All right. So we're going to talk about this. Let me know if you guys hear any background noise, but we're going to talk about this stock. We're going to get into it here. Good morning, everyone. Good morning. Let's get into it very quickly here. So this is a stock that's under $10 per share. I think that you guys have the propensity to make any money. And of course, don't look at the current projections right now because stocks are living entities. They go up, they go down, and they go all around. So this is Dingdong. In the first year, it has been down almost 80%. The past 3 months, it's been down 53%. I'm rounding up. The past month, it's been up 44%. The past week, it's been up 64.5%, okay? And then in the pre-market, it looks like it's teetering a little bit down at around 4%. And for you guys who are not familiar with Dingdong, let's look at this closer. Dingdong Limit operates a holding company through its subsidiaries, operates on-demand e-commerce business that offers fresh groceries and other daily necessities directly delivered to users and households in the People's Republic of China. Now, we're going to get into the whole China, Russian, Ukraine conflict. I want to focus right now on the stock itself. It's yesterday it was around $7 per share. As you can tell, we're looking at $6.56 current in the pre-market. But the stock is looking to be very, very profitable. But again, I'm giving you the balance of it because even though it's under $10 a share, and a lot of people are projecting the stock to go even to $30-something, meaning you're making over 200% of profit if you invest in the stock at the current price point that it is now. But we also have to talk about the good and the bad. All right, with that being said, we're looking at a 52-week high that this stock has been at $46. And of course, with the 52-week low, this stock has dropped down to $2.51. So there's money to be made when it dropped down to $2.51. Now it's currently at $6.56, $6.57 as the market is ticking in the pre-market. But there's money to be made. And a lot of times stocks like this, they're very volatile, meaning they go up really quickly and they go down really quickly. It's kind of like playing double dutch. You got to get in, you got to get out, right? But you have to watch it. You have to continuously watch it. And here what the analysts are saying on Robinhood, 10 analysts are stating that you should buy at 80% and sell at 20%. I kind of like the buy rating on this one. The sale is not above my threshold of 25%. I'm really aware and I'm really cognizant. I pay attention when I see sale over 25%. For most investors, as long as it's over 50% buy, they kind of, now we're getting into gambling, and I don't like to gamble with my investments. That's why I gamble when I play poker. That's what I do. All right. So with that being said, we're going to move it right along. We'll go over here to Yahoo this is Market Watch. And we're going to look at some of the details here. As you can tell, ladies and gentlemen, now this is what alarming for me, the EPS, the earnings per share. This is an analytical tool that is an indicator of a stock that's operating at a profit, a stock that may be reinvesting on their return in revenue, or stock that's operating out of debt. This is not uncommon. A lot of companies, whether you be in your 5th year or your 20th year, depending on how that year has turned out, could be operating out of debt. That doesn't mean that it won't be a profitable stock. Does that make any sense? Sometimes it's kind of like Amazon. In the past year, Amazon has been down 26%. Now it's rallying back because it's going to split its stocks 20-1. This happened 2 decades ago when Amazon was around 25% down. They split their stock and then their stock shot up. Okay, so there's different things that companies can do to boost their profits, to boost their revenue, and of course to boost the profit and share price of their stocks. Okay, let's see here. We see the 5-day return. In 5 days, the stock has been up 75%. And of course, in the past month, in totality, it has been up 34%. Okay, let's look at any headline news here that's dealing with Dingdong. The analyst on Market Watch is stating that it's overbought. Okay, again, we're going to have all these different analysis and predictions and forecasts, and they're going to be green, and some of them are going to be red. Some of them are going to be up, and some of them are going to be down. I just want to make sure, I want to make it very, very, excuse me. I want to make sure it's very, very basic for you guys, so you have good information going about your investments. If you have any questions, please leave them in the chat as I will read them a little bit later. Now, according to Yahoo Finance, the stock is overvalued. See, but then it has the performance outlook that in the short term, 2 to 6 weeks, that this stock is going to be raising in its share price, and then it's going to move laterally. So if I was an investor and I'm looking simply at the performance outlook, I'm going to buy, because if I buy in a low price point, buy low, sell high. If I buy low now and it goes up anywhere from $2 to $10, I made a substantial amount of money. And as it moves laterally, that is when I can start looking out to sell some of my positions and assets in this stocks. Okay, because again, you don't want to buy a stock and it's a liability. You want to buy a stock and make it an asset. Okay, now the overvalue, again, these are very, very quick analysis. If you notice, I don't really go into the deep dive of the financials of a company, because videos like that really does take some time. And I'm trying to give you the surface level so you can make a quick decision and see if this is a good stock for your portfolio. There's one thing else I want to show you on this one. Looking at your far right, the recommendation trends. As you can tell here, they had 4 for strong buy, 2 for buy, and 1 for underperform. On Yahoo Finance, they don't even have the stock for you to sell. They just have that it's underperforming, and that the potential in this stock is absolutely phenomenal, because we have to look at China as a whole. China is a billion people market. And with the coronavirus, don't forget, China has a lot of cardiovascular diseases, meaning don't forget they had SARS, bird flu, now coronavirus. So a lot of them are ordering things online, just like we do with Amazon, just like we do with Whole Foods and Overstock and all these other, where we buy things into our home. And now even Wayfair ordering furniture and coming to your house instead of going out to some big furniture store. You guys are on Wayfair and Etsy and all these. Just like we buy groceries and they bring them to our home, they have this in China. And this company, it's exploding in China, because everybody is loving that. Not only grocery, you can buy a lot of other things, and we'll get into that as well. And as you can tell, the recommendation rating has it at a 1.9 at a buy. Okay, almost at a strong buy. As a matter of fact, it's on the lower end of a strong buy and a higher end of a buy, if that makes any sense to you guys. Now, is Dingdong a good investment? This is the question I asked. It says 5 Wall Street research analysts have issued buy, hold, and sell. You see how this is kind of like all over the place? Now, granted, I see the value in the stock, family. I do. I see the value. This stock is under $10. It has a billion people market. You have a lot of things going on in China right now with Russia and the coronavirus. So there's a lot of things going on that can really explode this stock as people want to stay home and work from home. Okay. It says here, Ratings for Dingdong in the last year. There are currently 2 sell ratings and 3 buy ratings for the stock. The consensus among Wall Street research analysts is that the investors should hold. As you can tell on Robinhood, it was buy and sell. Buy at 80%, sell at 20%, where 0 people are saying hold. So as I was looking at all these analysts and what they're saying, and I'm looking at who are the investors in Dingdong, they're all Chinese. But nonetheless, it's so many controversial and contradicting analysis. That's why you see my white indicator light, because green means buy, red means sell, and white means I don't know. I don't even have a hold. I don't know. I just don't know on this one. But we're going to continue on because maybe you know for yourself. Let's read about this very quickly. It states that Dingdong, a leading and the fastest growing on-demand e-commerce company in China today, announced that its board of directors has authorized a share repurchase program under which the company may repurchase up to 30 million of its shares over a period until December 19, 2020. Let's read a little bit further here. Dingdong Limited is a leading and fastest growing on-demand e-commerce company in China, providing users with fresh produce, meat, seafood, and other daily necessities through a convenient and excellent shopping experience supported by extensive self-operating frontline fulfillment grid, meaning you do things by an app, you do things by a website. They're saying the infrastructure is there, and they have billions of people for their customers, and they're going out and serving those customers, okay? Now, here's some analysis. This is coming from the Wall Street Zen, and I kind of just want to walk you through this, family. It says here, JP Morgan is stating that this is a strong sale. Price target is $21, and it's going to raise up to 206%. And when it gets to that, and the date with this was last year, November 19th. So now they're like, oh, it's a strong sale. But you have Daiwa Capital and you have Morgan Stanley stating that it's a strong buy. It's a strong buy. Let me move on. Now, when we're looking at the variations and deviations of the projected price forecast of this particular stock, Dingdong, you guys know that there's profit to be made. And Sam, when I'm looking at the deviant shift of the projection of this forecast, I see that the market is rating at 24%, the industry at 28%, but the company at a -3%. Again, those correlating, contradicting, financials of this particular company is just staggering to me. It's saying that the industry over the next couple of years here is going to raise about 5%, but the company is going to be under. And the question here is Dingdong forecast to generate an efficient return on assets? Okay, the company, they're projecting that the company is going to be raised up at 156%, and the industry is going to raise up to 36%, while the market is raising at 34%, okay? So these are projections. It says DD return on equity. Can you read that? DD return on equity is forecast to be high in 3 years at 156%. Analysts are confident in the firm's ability to efficiently generate return on equity. Next, DD is forecast to generate higher return on assets around 12% than the U.S. grocery stores industry average, about 5.85%. So this is the comparison they're making to America, that this is going to raise 12% versus America's market only going to raise 5%. So again, to me, being an American, and I know the stake that China has in America, it kind of makes me take a second look at a lot of Chinese companies, because at any given moment, like Donald Trump came into office, he put sanctions on China, and then a lot of my Chinese stocks is tainted, right? They didn't drop all, but they tainted. It took a long time for them to gain momentum in order for me to either break even or make profit. That is very important. So again, I look at everything that's going on in the world, and believe me, in some sense, family, everything is financial. You have to connect the dots on this thing, okay? We're going to look at a little bit more here. They're looking at the earnings per share forecast and the revenue forecast. As you can tell, the earnings per share is down. Everything is in the red, but the revenue, they're looking at average 1-year forecast, 3.7 billion, 2-year forecast, 4.7 billion. 3-year forecast, almost 6 billion at an 85% return. I mean, the numbers are staggering when you look at it like this. When you look at a more detailed analysis of the projection of the company, because of the current state, there's money to be made. CNN Finance, very simple. I love always showing these quick numbers instead of going in detail like I did before. But they're stating here on the median end, we're looking around $20 at 187% return. And again, the current stock price is $6.22. I mean, family, if you get in on this stock, there's a lot of money to be made, a lot of profit, okay? On the high end, we're looking at a price increase at around 374%. The stock going to roughly $33 per share. I wish I would. I just don't know. And to take this a little bit further, I have to go in just a little bit more. Stay with me here, because I want to contextualize this, and we understand that currently the market is live. So I want to jump back here very quickly before I go into the next segment of this stock. Let me go up. Here we go. Now, the current stock is live on today. It's already down like 9%. And I tell you, don't waver because the market is current and it's down. A lot of you want to see instant returns. Don't forget, investment takes time. Nothing is just going to give you an instant return like gambling. It's not gambling. Now, sometimes you can just be really lucky and get in at the market at a good time and a stock explode. That happened to me before, but that's rare. Okay, that doesn't happen every day, doesn't happen every month. But let me move on to give you some other information that I tell you is a big part of my research when it comes to investing in a stock, and that's the news. That is the news. Now, prior to Putin and I don't know how, is it Xi? President Z or President Ching or Xi? I don't know how to pronounce it. My apologies. Russia asked China for military and economic aid from Ukraine war, officials say, and this came out early March, mid-March, March 13th. And I've been trying to follow the story, but nothing has come out if he's really going to help. Now, before Putin and the current president of China, they have been rivals. They have always been controversial with each other. But with Putin, this particular president, they have a strong bond. They're friends. Okay, and I want you to look at this picture. Now, when you were young, remember you and your friends like, oh man, we're gonna do it up. We're gonna wear the black jeans. We're gonna wear the white shirt. Look at these guys. Can I blow this up for you? They best friends. They got on the same suit and the exact same tie. These two are friends. When have you seen two world powers? And I mean two world powers. Don't forget, Russia has the largest country in the world, while China has the largest military in the world. These are world superpowers, and they're dressing alike. It's just funny to me, family. It's just funny. But I wanted to show you that very quickly, because if they have any evidence that China is going to support Russia in the war against Ukraine, America may put sanctions on Russia, sanctions on China, which will hurt any Chinese stock. It will hurt any Chinese stock. There may be some that fly under the radar, but more times than not, family, is going to hurt any of your Chinese stocks that you have in your portfolio, like the infamous that hasn't been bouncing back, NEO, which is one I made tons of money off, and now I'm not. Russia asked China to give it military equipment and support for the war in Ukraine after President Vladimir Putin began a full-scale invasion last month, according to U.S. officials. So that's what I want to make you cognizant of when you invest in the stock, Dingdong. Let me put some things into perspective for you. Let's just take, for instance, that China gets involved with this war with Russia, and they actually give Russia troops, because they're asking for military support and they're asking for economic support. Now, the military support, they're mostly asking for equipment. China has the largest army in the world. They have 2.2 million active duty soldiers. America, we have roughly over 1 million. Okay, we have roughly over 1 million. That means for every one American soldier, they have 10. And when it comes to the amount that they have on reserve, we have a little bit over 2 million total when you include active duty. and reserve, they have over 4 million. Okay, they have a 4 million. Let me look at this a little bit closer. I want you guys to see this. I want you guys to see this for yourselves. Let me go back here. I think, let's see here. I'm just gonna look up. U.S. military soldiers. Okay. I want to do a breakdown so you guys understand what I'm getting at. United States Army. 500,000 regular personnel, 336,000 National Guard, which are ran by the states. So the federal government have to go to the states. But when we look at this, family, what we're looking at, how many service soldiers does the U.S. have? Look at this. When we Army, Navy, and Air Force, we're looking roughly at, I'm not going to count the Army National Guard because, again, that's not federal soldiers, okay? We have to go through the states. We're looking at roughly 1 million, okay? Roughly 1 million active duty. Now, let me show you China. Active military, 2.2 million soldiers, according to 4 million. Now, if we go and we say, okay, I want to show all of this, I'm basically stating that they outnumber us. Now, we have more advanced technology, what kind of gives us the edge. Okay, just allow it. Just allow it right now. Active duty, 481,000. You see Air Force. Let me blow this up a little bit. Marine Corps Reserve, Naval Reserve, Marine Corps active. We only roughly have 181,000 Marines. So our numbers are half of the Chinese. They're half of the Chinese. Total, China has over 4 million 4 million military personnel ready to go. Where the U.S., we have roughly half of that when you add it all together, okay? When you add it all together, we have around half of that. And the only reason why I'm showing you guys this, family, the only reason why I'm showing this is I want you to look at your Chinese investment, because I'm here to help you guys to earn more money versus lose more money. And you have to look at the bigger picture. If there's more rhetoric, is there more rooters coming out stating that China is or will or propose to help Russia, look for America and NATO and other allies of NATO to put sanctions on China, which will directly hurt any Chinese stocks in your portfolio. Just wanted to let you know, you guys have a great and wonderful day. Hump day! You know I do it every Wednesday. Have a good one. Learn money and be inspired.